The rolling hills of New Zealand and the rich pasture land for cows and sheep, from which this small country launched one of the world's biggest dairy industries, and with it one of the industry's biggest scandals. From here, the Fonterra dairy enterprise came into being, New Zealand's biggest company, which has stretched its operations throughout the world, with annual dairy sales reaching nearly $10 billion. The New Zealand dairy industry uses the latest equipment and techniques, and its standards are amongst the highest in the world. But farmers here are concerned that the fallout from the Sanlu scandal could have severe financial repercussions for them. Michael Conwell is one of the 11,000 New Zealand farmers who make up the Fonterra cooperative. He was appalled by what happened in China, but he has invested heavily in his farm, and if the company loses the confidence of world markets, he could face ruin.
The biggest concern is that we possibly may lose the market overseas, which is extremely one of our bigger markets, and we may not necessarily be able to find a replacement market that easily, which means obviously the value for our milk may come down because we may not be able to sell it. And with the investment that we've got here, something like $6 or $7 million invested in this property, that's a major concern.
Farmers are concerned that they could ultimately pay a price for something they were not responsible for.
I suppose it's regrettable what is happening, and it's sad what's happened, but it's also ensuring that the process is going forward. There's some checks and balances that were done during the process, but obviously fell down in that situation, and probably reflective of the wider situation that was going on there in China.
Farmers are critical of the way Fonterra has handled the whole matter, especially its slowness to reveal the extent of the problem. It has brought into question its business practices and caused farmers to challenge any similar business ventures in the communist country.
Any future investment in a company in China would have to have an agreement that the processes and the standards of testing and quality assurance in the company was as high as what it is in New Zealand, and that's been the downfall.
As a 43% stakeholder in Sanlu, Fonterra didn't have that control. As a result, melamine was put into milk powder to boost protein levels, and 4 children died. More than 50,000 were taken ill. That cost Fonterra dear. Nearly $80 million was wiped off its paper value, and the farmers have blocked company moves to raise capital for further growth until the melamine issue has been fully investigated. There are no figures yet to say how dairy sales have been hit. Tony Birtley, Al Jazeera, ROTORUA, New Zealand.